All right, traders. Happy Friday. This is Christian from Tribeca Trade Group, and this is your end of day video for August 26th. We'll be doing a weekly review, and we'll make this a quick video before the weekend. I just wanted to go over, just kind of final thoughts after, a pretty nasty day in the market. I don't know, you can call it whatever you want. I just put something very simple in here for theme of the day. And of course, before we get into the nitty gritty, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. But I don't know, sometimes things kind of crack me up a little bit in the market. Look at the performance of from the percentage change from the open. There's nothing in here that was really a bright spot for the day. Nothing positive, everything down pretty decently. Your higher beta areas of the market really got crushed today. Biotech was down close to 5% over this session. Blockchain stocks, they got hit pretty hard, but you could see there's various different groups that were down more than 3% for the day. The Qs finished down 4% for the day. SPY finished down over 3%. I mean, just really nasty price action. Bonds did gain a little bit on a little bit of a flight to safety move. And then look at the move in the VIX. The VIX topped out at 25.90 for the day and closed at, I have this covered up on my other screen, 25.56. So again, it's a big move. So what happened today? Like, what was the story? I mean, clearly, my videos, I do mention what I think every day and what could happen the next day. And I'll tell you, I wasn't looking for this type of a move today. I really thought that they were going to kind of stay the course and mention a lot of things that they did say, about having to fight inflation and having to do that. One data point is not going to make that much of a difference. They have to see a series of this, but I wasn't expecting them to be as severe, mentioning that there's going to be pain for people and so on and so forth. So they really kind of, Powell really drove that home, as well as a plethora of Fed speakers that all kind of saying the same thing. I don't really understand what their intention is to have 7 different Fed speakers come on and tell you how bad things have to get. But, that's could be was why people talk about why a soft landing is so difficult to achieve. I mean, you really have to be negative to get things to where you want to be in terms of what's going on with inflation. And this is no laughing matter in terms of inflation, right? This is the highest inflation since we've seen the 70s. It's not the highest interest rates that we've seen since the 70s. So, they really want to get that down, and they want to get it down quickly. Maybe they want to get, maybe part of this is, as well, if you want to add another wrinkle in there and, a little bit of conspiracy theory, which is, you can do that, which could be that they want to get this down before the midterm elections too, right? Those are going to be in a month for now. And, it would look better for them if they would say that, hey, we really got this inflation problem, in check in a month. So it could be some of that going on. Bottom line is, so we're going to forget about all this type of talk and opinion and so forth. You're going to hear any market participant kind of talk about that. I'm going to talk about in this video what I, because again, coming into today, it's very difficult to kind of predict a day like this. So yes, I gave my opinion on what would happen, but I didn't really have, my money where my mouth is. What I said yesterday was it was a great day to take off exposure, right? And a gift, right? That was one of the things that I said on Twitter. I said, hey, this is a really nice gift. One of the things that I talked about in yesterday's video too was, are you going to be more of kind of thinking of things, somewhat of an analogy that I used yesterday is, are you going to be the house in a casino, right? Are you going to be the bookmaker, or are you going to be the gambler, right? And today kind of that played out to some extent. If you were smart about things and realized yesterday that, another expression that I used yesterday was, a bird in the hand is worth twice in the bush, or 2 in the bush, excuse me. I get these expressions wrong all the time, sorry. But that's kind of the situation with trading, right? You knew that yesterday you had this massive, rally at the end of the day, for no particular reason, because you didn't learn anything yesterday. Today was the main event, right? And and by the way, inflation did, we get the PCE deflator that came out in the morning, which actually had a downtick. I know that's now ancient history, but that's moving in the right, that did move in the right direction. So what I come back to is, let this play out. Another thing that I've been talking about too is that we've got 3 more days of August, and then we're on to September, which September is a notoriously weak month, especially in a midterm election. So that means take it easy, right? And get through that month, get through this month, and maybe things will kind of turn towards more of the bullish seasonality, which is what you see generally in October, November, December. So again, you spook the markets. If you were not fully exposed today, today wasn't so bad for you. I was down for the day, and P&L, because I still, as I mentioned, again, I'm sorry to say the same, I'm sorry to repeat myself, but I do mention a lot of these things in the videos, exactly where I stand. And I mentioned that I reduced risk yesterday, but I didn't take off all my positions. I never rarely do that. But today I lightened up on risk more, just because of what the technicals are telling me. So I lost a little bit of money today, but for the week, up nicely. And hopefully for the month of August, I'll also have a nice month, even though I was down a little bit today. All right. So again, that's the whole key. One of the things that also, I apologize, this will be the last time I said this, but I did mention in the beginning of the day, I said, I don't think that there's much edge for the day. And I'm not really going to try to guess what's going to happen for the day. Just didn't think today was a great day to kind of think that that you were going to make a ton of money, unless you were heavy short and kind of stuck to your guns about being short this market. But that was my opinion kind of yesterday, going into today. And I said that basically, as I try to set up every month, I look to figure out what my goals are, right? When we factor all those things in, seasonality, breadth, what the trend is in the market, what price is telling you, right? I try to come up with a goal for the month. And I mentioned this morning, I was like, hey, I got to my goal for the month. I got what I was looking for. So whether or not you want to press here, or I wanted to press here, is not the smartest thing, right? So so that said, let me get to the technicals, right? And we'll kind of try to forget about, all the other things happening, but let's figure out what price and trend are telling us, right? And here's sometimes where the market does get, you get mixed signals sometimes, and things get a little bit difficult. But remember yesterday, and I don't think I went over in yesterday's video, I don't think I went over the S&P chart, but yesterday the price got back above all the short-term moving averages, right? And the moving averages started to slope higher again. Now that's not the case anymore, and you got a very, very nasty looking bar. It kind of reminds me a little bit of this particular bar here, where things were starting to turn higher again. So the issue, and this was the issue early on today, was that the problem here is that there's just not a lot of support around these levels. So once we broke this, and this is what happens sometimes. I sent out a tweet saying, hey, that was a good mark of the lows for the week. Well, not so fast, right? This thing really got, we hit resistance, and that's one of the biggest rejections I've seen in a while in terms of what transpired today. But that's heavy selling pressure. Another thing that kind of helps on days like this, right? We have this breadth indicator that's on the bottom left of your screen. Whenever that, and we have seen this now. We saw it Thursday of last week. We saw it Friday of last week, and on Monday as well, where just the breadth is too negative early on in the day for the market to come back. It's not impossible, but when you're talking about probabilities, as we do a lot when we talk about trading, it's very, the probability is not skewed in your favor that the market's going to come back. When you start to see this go deep red, when NYSE is greater than a -4, right? Which is basically what we saw after the first hour. I'm like, oh, geez, that's not a good sign. It's very difficult for the market to come back when you have that heavy selling pressure. So that played out, pretty heavily to the downside. I'm surprised, again, we're looking at a down almost 4% day in the S&P, and I don't really see anything that convincing until we get down to 39.59, right? And if we bring that over to the chart over here, that's kind of lines up with the top of value for the month. So we're probably also going to get a 50-day moving average test. Now, perhaps, there's a lot of things that have transpired since. So I think what will be interesting is whether or not, and you could probably at this point begin to draw some type of a trend line in here. And, I don't know if that's going to come here or so I'm not going to draw this trend line here yet, because I don't know if it's worthwhile drawing this here or more towards at the 50-day moving average. I could certainly put this in here, but I don't think it's going to make much reference. I think you need another day. We finished right on the lows of the day. So what do I do when things happen like this? Well, again, I partially took off my hedge that I had on for most of the week, which was SQQQ. I put that back on for the day. Right. And you could kind of see my trading blotter. Again, I not only give you my opinions and, what I think in terms of technicals, but I tell you every day how I traded and what I traded. But, so here's the beginning of the day. I got out of my Alcoa, which worked pretty well. We were talking about some of the metals and mining. That's a chart that I put out right in the beginning of the day, talking about XME, which I didn't look at how this ended up, but it's a bearish engulfing. So I was looking at CMC, which I took a position in the beginning of the day, and then I backed out of that. I sold that position for a loss. Here, for whatever reason, I don't have the entry in the trades channel. I made a mistake. I do make mistakes from time to time, but here's your exit out of that position for a loss. I also tried to play a little bit of a bounce. That didn't work. And that was the last shot that I gave at that. Then basically everything everything else that I did today, well, sorry, not everything else that I did today, but I got out of P Labs. I actually got out of something that I didn't want to get out of, but hey, the price is telling me to get out of it, right? And again, I'm not going to argue with price. If I think that things are really weak, there's no point in me sticking in a trade to be stubborn. But unfortunately, I had to get out of one of my favorites, right? I got out of GFS and lived to fight another day. I'll go back into that name, once things kind of firm up a little bit, but I'm not ruining my month by staying in some positions that may continue to go down a little bit further. Got out of a few other names, like a couple starter positions, a couple other trades where I was still up in but gave back a little bit, right? And then I put on an I put that SQQQ trade back on because if you've been watching my videos, you know that I've been putting that trade on when price gets back below the short-term moving averages. This way, I'm following what the trend is telling me to do. So I did put this back in there again, even though it was very late in the day. I need to scroll down a little bit. I also put on a little bit of speculative stuff to the short side, right? Not anything large here, but I think the ARK ETF, maybe that breaks the bottom of value. Very weird that this didn't. You look at the S&P, right, which was down huge. Definitely broke the lows, broke these. The Qs also, by the way, wow, look at that. The Qs made it all the way down to the top of value. I didn't see that till the end of the day. How about that? Again, very, very ugly looking. And that's going to be testing the 50-day moving average sooner than the S&P. Now, again, you might be able to draw just like this trend line was here. This might actually work at this point. So I can draw this one in. Maybe it'll be a little bit different trend line because this was for the break higher here. So we'll see if this, how this goes. Right, and I'll draw, maybe I'll make this a different color in here so that I can kind of separate it a little bit. But there you go. So, that'll be something to watch in the beginning of next week. So yes, I did add, so all of these things, right? Qs break the lows this week, break the lows for basically, right back to where we were to start the month. Unbelievable, right? But ARK, I could have more to the downside to go. I can't believe when I looked at this that this like barely broke the week's lows. So I did see a put buyer at the end of the day. I followed that for a small weekly trade for next week. All right. So playing, if there's momentum that's going to continue over the weekend, I've got something in place. I also have some SQQQ because I'm still in about like 3 positions, but this was a big unwinding. There's no question about it. When I see support break like that, right, I'm out of positions. There's no questions asked, right? It doesn't matter where I got into them. You got to keep the the eyes on the road ahead. Forget about if they're profitable positions. Unprofitable positions, right? This is about risk management. How many times have I said this year that your year is going to be defined on how you manage the losers, right? And, not having big losers, right? That's the whole key. You can have small winners, big winners, small losers. You cannot have big losers, right? Especially for, being relaxed in trade management and risk management. You can't do it this year, right? If you're going to be a profitable trader. I also like to review the performance for the week, right? So, kind of amazing because the Qs were down, like we said, 4%. So coming into today, the indices were right around flat for the day. I think they were down just a touch, but yeah, that's where it stacks up for the week. SPY down 4% for the week. IWM down 3%. Q's down 4.8%. TLT ended up positive for the week. The dollar ended up slightly, up a little bit less than 1% for the week. Interesting, really interesting when you look at the sector distribution that you had. The Chinese internets were up 10%. The energy stocks ended up putting in a pretty good week. When you look at those three ETFs, OIH, XOP, XLE, they were all up over 4% for the week. Metals and mining, which again, ugly looking candle for the day, but still finished up 3.4%. Your agriculture stocks were a big story this week. Steel stocks, which fit into the metals and mining group, were also up 2%. Clean energy finished up 1% for the week, despite getting really hit hard today. And on the downside, no, there wasn't anything that was down like 8, 9, 10%, but retail was down, tech was down 5.6%. So really some big underperformance by your big tech names this week. I'll tell you, they didn't look right to me all week long. I could not find, usually I kind of look at the big FANG names for maybe one day of the week to see if there's some momentum there, but none of those set up to me this week, right? And I looked several times and they just did not look right to me. Consumer discretionary down 4.7%. XLV, even healthcare names were down 4% for the week. So no hiding there. And again, the theme that I see is a lot of commodities outperforming. And even when you look at the internationals, right? Chile, which is heavy commodities, were up 8.5%. Brazil was up 2.6%. Peru up 1%. So a lot of Latin America, a lot of just commodity areas of the market. I don't know why Russia's in here anymore, but I'll have to take that one off the sheet. But I did see, I think I see South Africa was up 1.6%. I thought I saw Australia in there, but I guess not. And then on the downside, heavy Europe. Europe sold off pretty hard this week. Again, that was the other story today, was that the ECB is super hawkish as well, talking about that their next meeting could be 75 basis points as well, that's a big jump in expectations. So I'll leave you with two other things here. Right. So here's the difference. This is how the, coming, out of the Fed meeting, right? This is something that I look at a lot because I like to know what the market is pricing in. Now notice, so I'm going to flip back and forth between, this is 15 days ago, right? And the market was expecting about 60 basis points, right? Notice how that hasn't changed much. It's still 66, right? And even when you go out to November, so when you factor in two Fed meetings, right? And these are additive. So 1.1 is what the market is looking now for what the market is looking at now for rate hikes, right? This is a little bit worse, right? So 15 days ago, it was about 97 basis points. So that has moved about 10 basis points, right? December was 1.16. Now it's 1.3. So this did move 15 basis points. So it got worse from where it was 15 days ago. But here's the real story, right? And this is what Powell was talking about today, as well as some of the other Fed governors, is look at what they did to the back end, right? Everybody started to think, or the market was pricing in rate cuts for the back end, the middle and the back end of 2023. Look at how the slope is almost flat now versus where it was 15 days ago. So they really hammered that point home today, that they don't want to be, that they want to keep rates high for a while. So yes, there was definitely a change, or changing of the pricing in terms of the interest rate curve, right? And again, this is the short end of the curve. This is nothing to do with long-term longer term interest rates, right? This is the overnight rate and them adjusting that. All right. So the last thing I will say, and this will be, a little bit more positive, but if you get through this, right? We were talking about some names. We did a big Q&A session today at Tribeca Trade Group, and we were talking about names like this, right? And this is why I do think that if you can be patient and get through some of this weak seasonality that we're now in and will be for the next month, right? There are still going to be a lot of good trading opportunities. Some of these names haven't given up any, anything. There's been no selling in something like this, right? And, I don't think, I'm just illustrating this, not to say that this is an entry point or anything like that, but I'm just saying, if this thing comes in, right, and consolidates a little bit, and there's about 5 to 10 other names like this too, they're going to set up for some really good trade entries. So be patient. Don't get burned out. Don't, try not to, keep, again, I'm not giving out any advice or recommendations, but really try to not get over the tips of your skis with, with risk over the next month, because I think that once you get through a difficult period, right, things might begin to get better, right? And I've been saying that now for a while, right? We've certainly had some good trading opportunities over the last month or so, but it's going to be a whippy, tricky type tape. So stay objective, stay nimble. And if, once again, I say this all the time, but if you're not a member of Tribeca Trade Group, right, we give this analysis every day, right? I try to really, tell traders, again, not giving advice or recommendations, but, this game to me is a lot about probabilities, right? And, that was one of, I think, the better things that I said. I do say a lot of things, but I said, yesterday was a great day to take profits and to take risk off. So we'll be continuing to do that. We'll put out another watch list. Our watch list did very well this week. I posted that earlier, which again has changed. But again, I like I said, I wasn't interested in holding any of these things, into today. But given a down week, we really kind of came up with some good setups. Did I take every one of these trades? No, but I was holding things like TMDX and a number of these other plays, AMR, and a few others that were on the list. And of course, this is just a starting point for the week. We caught a lot of other trades too as well this week that worked out pretty well. So make sure that you get in here, try it out for a month, right? By all means, even if you decide to just try it for a month, right, and you don't want to go further after that, I love to hear from people, and I love to get feedback from traders who try it out and see if this is something that really works for them. But there you are, guys. Have a great weekend, and I'll see you on Monday. Members, I will see you on Sunday.